Right.
So there's no denying that 2008, and it's so young, isn't it, has been quite a rough year for the markets.
11% down in just the past 5 trading days, with the S&P 500 down 5.3% in the past 5 days. Been the worst start to a year ever. All major markets in correction mode, meaning they're down more than 10% from the recent highs.
So where can investors find a little shelter from this storm? Our Fox panel is here to give us their safe haven ideas for you. We have independent trader Eric Bowling, Fox Business's own Liz McDonald, Joran Brook from the Ayn Rand Institute, and Peter Schiff, author of Crash Proof. Good to have all of you. I'm dying to know what the ideas are. Eric, you start. Where do I put my money in this atmosphere?
Well, how many times have I been on here in the last few months? Quite a few. I'm going to bring it up again. People are probably tired of seeing it.
Peter's not.
But we still are making new all-time highs in gold, in silver this week, in some of the, not the industrial, the precious metals.
Sure.
Not the industrials, not the base, but the precious metals, because they have things like weak dollar, which Peter and I are going to get into later. They also have geopolitics involved. And as currencies, as people move into different currencies, they realize that the one currency that's going to retain value is gold and silver.
ETFs?
ETF. GLD is the ETF that anyone can trade. If you have a stock account, you go to your stockbroker and say, I want GLD, and basically what you're doing, you're buying a stock share of a fund that holds gold bullion.
And you have some of that.
And I have some of that, and I do.
All right. Elizabeth, what if you don't want to go for the hard
Yeah, what if you don't
gold?
want to go? You know, it does feel like the wheels are coming off the stock market, but there are some, stocks you may want to take a look at. You look at the oil services sector, and the oil drillers up 45% last year. I'm looking at Weatherford International. They're a great play in the Caspian Sea, the Middle East. A lot of insider buying at the company as well. This is a play on oil, of course. Oil, it moves up and down. The stock prices in this sector tend to move in tandem with oil prices. But hey, this company is going like gangbusters. I've been looking. It's also cheap. It's trades at 22, 23 times earnings. I mean, it takes $23 to buy a bucket.
By the way, you got an oil trader right next to you. Is that a good pick?
Not only it's a great pick, because a lot of these oil service stocks are booked years in advance. So they're no matter what happens to the price of oil going forward, they're booked 2 years down the road. They're going to have their business in line.
Lizzie, explain insider buying and why that's significant to an average person out there watching.
Right. In other words, directors and officers at the company
think it's great,
and they're putting their own skin in the game. And Eric is right. I mean, the inventory of what the jobs this company has in store, they have a backlog of work, and so that's what I like. It's putting a floor under the revenues. And yes, the insiders there are liking the stock enough. They made a ton of money buying this stock last year. I think it's still going to perform pretty well.
We'll
on a
talk
forward
about somebody who puts their own skin in the game. Peter, you not only advocate gold, you put a lot of your own money into gold. What else are you putting money in?
Well, yeah, the other safe haven that I've been helping my clients is to accumulate non-U.S. dollar assets. You want to own companies outside the United States that earn their revenues outside the United States, that have very little to do with our economy and have everything to do with the growing wealth and rising standard of living of the rest of the world. But, I think it's important to point out when it comes to safe havens that what a lot of people think of as a safe haven, treasury bonds, muni bonds, CDs, none of those assets are safe. The U.S. dollar is going to lose a substantial amount of its value.
So tell us what is safe. What do you like?
Well, yeah, but anybody that's in those assets is going to take a huge loss in purchasing power. So you got to look outside the United States. You got to buy, Eric already talked about gold. You can buy gold bullion. You can buy silver, other commodities. And if you want to buy bonds, you can buy them. But buy them in Germany, buy them in Australia, buy them in Canada, buy them in Switzerland, or don't buy them in America. And I prefer equities. I like, I buy a lot of utilities, a lot of refineries, a lot of pipelines, a lot of agricultural companies, farms, all sorts of income-generating assets. I'm able to get from my clients, 7-8% dividend yields on conservative portfolios of foreign stocks. And so the short-term volatility doesn't bother you when you're getting significant income from your assets, especially when that income is in currencies that are rising as the dollar falls.
All right, Joran, what do you say?
Well, I'm not a stock picker, as you know, but I worry a little bit about gold and some of these other assets. If you were sitting in 1980, gold at 800 plus, it looked like a good investment then. Inflation was high.
No, it didn't.
I'm afraid gold. It's already. Inflation is already priced in. It might not be. It might go to 1,000. It might go to 1,200. But I think there's real risk in buying gold.
Remember, gold started in 1970 at $35 an ounce. The fact that it was at 800 at the end of that reign, that was a tip of the bubble. Buying gold at 800 in 1990 was like buying the NASDAQ at 5,000 and 2,000. We are still early in this game.
And Eric, go ahead.
Well, that's the question. The question is, are we early in the game or aren't we?
Eric, go ahead.
If you adjust that $850 price for inflation, as you know, it's somewhere around $2,100 or $2,200
gold will
per
get
ounce.
there.
It can still go a lot higher.
Sure, it might go to $5,000 or $10,000, in which case it would be expensive, just like it was in 1980. Don't wait for that. Don't wait for the peak of a bubble. Buy it now. I mean, it's not the rock bottom, but we're closer to the bottom than the top.
These guys put together a chart for me. This is fantastic. This is a chart, and Peter, you'll appreciate this as well. This is gold in euro terms. So not only has it appreciated because of the dollar weakness, it's appreciating against every other currency. One of the strongest currencies in the world is the euro. Look at the gold. I mean, and that chart just shows where it stopped recently.
That's because all governments are creating inflation. So if you want to protect yourself from inflation, you buy gold.
Hold on, you're missing a backstory. I think Eric is right. A lot of middle-class people, the growing middle class in India and China means that these people are buying jewelry. You can't discount the fact it is so. You're absolutely wrong. Growth of gold prices in India alone. I mean, that's putting a nice floor under the gold price. And Eric is absolutely right. It's way off its inflation-adjusted highs. I think it's north of 2,300. So yeah, I in fact like gold, and I made a killing of this little gold fund.
Let me ask Peter this question. Peter, the price of gold really spiked solidly above 800 after the death of Benazir Bhutto. That clearly had some effect because a lot of Asians, particularly in Pakistan and India, prefer gold as a hedge against uncertainty.
Look, that's just noise. It's a bull market. It's going to go up. You guys can try to find reasons to explain any kind of daily move. But basically what's happening...
This wasn't a daily move. This was the week after Benazir Bhutto was assassinated. It went up way above 800.
Gold would have gone up even if he wasn't assassinated.
You're preaching to the choir, Peter. I mean, Liz agrees and Eric agrees, certainly.
What I'm saying is it spiked last night when Hillary won the primary. She made a speech on telling you, if you watch the gold chart while she was speaking,
this morning. What difference does it make? Look, the reason gold is going up is because people are losing confidence in the alternatives, which are paper currencies.
Peter, you get the last word. Now, what if you're a more passive investor? What should you do then?
What should you worry about in this market turmoil when it comes to your 401k? We'll tell you if it's time to